Welcome everyone. And again, first of all, thank you for all the shareholder support throughout 2021, or excuse me, 2020. And I anticipate continued support in 2021. It's been a very interesting year for QC Copper. It's been transformative in our branding and our name, and certainly our financial position. And even more interesting, copper has revived itself, and there's a tremendous interest in what we're up to and what we're going to execute in 2021. So I'm going to run through this presentation fairly briefly, but I think it'll cover the basis. The focus will be mostly what's ahead, but I may choose to sum up what's happened in the past a little bit. So these are our disclaimer, forward-looking statements. I will be making them throughout this presentation. So for those who are new to the story, QC Copper was born in 2018. We were born as Power Ore, but we recently changed our name effective September 28th of this year. We did so to better reflect the fact that we are a Quebec focused, hence the QC, and focused on copper and gold. When this reflects the OPEMISKA acquisition and the expansion of the OPEMISKA acquisition that we made subsequent to the company being formed in 2018. So I think the timing was right. Nothing fundamentally changed with the name. However, it made our focus very clear. What we do have and what our focus is a large-scale land package in the CHIBOUGAMAU district of Quebec. CHIBOUGAMAU is a world-class district for copper. Certainly within Eastern Canada, it's the most important copper district there. There are many resources and deposits, former production. In fact, the OPEMISKA was in itself a world-class mine, which we have since acquired. It was operated by Falconbridge for nearly 50 years and extracted 1.4 billion pounds of copper and nearly 1 million ounces of gold out of a high-grade vein system and a number of shafts. For those who are not familiar with what our plan was, we acquired the property with a vision to reinterpret it as a bulk tonnage open pit operation. Certainly the bulk of the resources as they are understood today will be on the Springer and Perry portion of it. We've done a lot of work in terms of drilling, reinterpretation to prove to us that there is a substantial resource there, which is near surface and constrained by a pit. We've got an internal model that we've been working on. And recently we completed a substantial financing. We raised $5 million with substantial demand. I think there was, I know there was substantial more demand than $5 million to come into the company. And these funds will primarily go towards our drilling out to define a larger resource. So we've got an internal resource that we're working with. It's been done independently, and our goal is to complete this 20,000 meters and come out with an updated resource, or a 43-101 compliant resource, together with preliminary engineering and economics in the form of a PEA by the latter half of 2021. We're hoping for Q3 as our target. These 20,000 meters will go towards expanding the tons, hopefully increasing the grade, and obviously optimizing the strip ratio as much as possible. We think that we think that the copper fundamentals are extremely strong, and they're likely to get stronger throughout 2021 and beyond. We had been somewhat dormant in our efforts to raise capital and push this project and company forward in light of copper's demise, let's just call it. Copper was earlier in the year, it was sub at $2. Now it's $3.50. That invites a lot of interest into companies like ours and lowers our cost of capital. We were successful in halving our cost of capital throughout this financing relative to the previous financing that we did less than 4 months before it. And so that's a major benefit to the shareholders, and we're going to put that money into the ground and move this forward in a strong copper market, we certainly hope. Here's a corporate overview. Obviously, we are on the TSX Venture, great exchange. We have 105 million shares outstanding now, and our market cap ballpark is $18 million. I will point out that we have about, as it says here, about $6.4 million in cash. That's obviously after our financing. We also have 8 million shares, $8 million worth of shares in BASELODE. That figure is very fluid. We actually have 18 million shares in BASELODE, and BASELODE is trading at nearly 70 cents now. So that is a substantial, call it working capital position relative to our market caps. So I think there is, for prospective shareholders, existing shareholders, you have not missed the opportunity to invest in a value situation here that we are offering, excuse me, in QC Copper and Gold. our call on this project and the land package is substantial when you consider that the enterprise value is nearly equals our basic market capitalization. So I think there's tremendous value. I think it's going to continue to be unlocked as we execute this 20,000 meter drill program and work towards defining an open pit resource in the heart of Quebec on the highway with the CN rail next to our property. Literally, it's right there, with the Quebec government upgrading that rail back to Rouen. The infrastructure just does not need to be built. What will need to be built after we've defined the resource and its economics is obviously an open pit and a mill. Aside from that, the rail power road, the labor force is even there in the CHIBOUGAMAU camp. It's really a phenomenal advantage that this project offers. And then on top of that, we have optionality, which will be, looking for new resources in a very mature camp. And we have some new ideas led by Charles Baudry on how we may find that. I mentioned baseload. This was I have to hand it to our team here. This was a phenomenally accretive transaction that the company pulled off earlier this year. We don't get a lot of credit for it, in my opinion, when you look at our market cap, but we sold a non-core asset called the Man Mine to a company called BASELODE, which I am clearly affiliated with. In fact, I am the chairman of BASELODE Energy. BASELODE is run by a gentleman by the name of James Sykes, a very talented uranium-focused explorationist who lives in Saskatoon and focuses his efforts on finding ore bodies in the Athabasca region of Saskatchewan. BASELODE Energy, as I said, was born in June of 2020 this year. It IPO'd with the Man Mine. It went on to acquire substantially sized land packages in the Athabasca Basin. It says here it has $2.9 million in cash. That is incorrect. It has $6.5 million in cash. It's well financed to go out there and find an ore body. We believe if Mr. Sykes is successful in his task to go and delineate an ore body or discover an ore body first, I think that 18 million share position in BASELODE could be a huge success. So I view a huge success for BASELODE, but also a huge success for QC Copper, given our substantial position in that company and our support for James. So really, QC Copper is a copper and gold focused play. That is our core business, nothing else other than delineating the OPEMISKA and an open pit resource. However, we just happen to have a really nice uranium optionality play with our exposure to BASELODE Energy. And I'll note that we did that valuation at $1 million approximately when we've vended it and we've turned it into $8-9 million of equitable security. So that was a very good corporate win for us. And we'll see what happens in 2021. Our team, I'll talk a little bit about who we are as a broader group. QC Copper is a part of the OR group, and the OR group it's led by myself, but without my team, I would not be able to do any of this. We are a group of entrepreneurs. We're based out of Toronto, but we are all scattered throughout Canada. In effect, we've got other companies in our portfolio, such as Mustango River Resources, Ore Finders, which is a fairly significant shareholder of QC Copper. I mentioned BASELODE, and a new company by the name of American Eagle Gold, which we're going to be IPOing in February of 2021. So we've been quite successful, I would say, in terms of providing shareholder returns throughout 2020. In 2019 and prior to, let's just say, from 2013, we had a very specific view where we were not focused on drilling and looking for discoveries. We felt that the market wasn't there, that the cost of capital was too high, and even if you were successful in finding an ore body, the returns just weren't there, commensurate with the risk you were forced to take. And so we had always been very clear on terms of what our strategy was, and that when the market turned, and clearly in 2020, the market has turned both for gold, but also for base metals, particularly copper as well, which I believe has outperformed gold. There is investor interest, and what that means is lower cost of capitals. It's a fancy way of saying a higher share price, and interest when you are successful in what you tell your shareholders you're going to do. I think our broader group has been successful in outlining a plan and completing that. And so 2020 was really about raising capital. Prior to that, as I said, it was about putting opportunities together, making acquisitions out of somewhat distressed or unique situations in a down market, meaning we bought things cheap. We waited for interest to come back in 2020. The interest came back in, and we've raised $33 million between the group this year. And you can expect 2021 to be the year of the drill bit. And so we're going to be reinvesting and allocating that capital as intelligently as we possibly can to either delineating resources or finding new ore bodies, specifically, obviously, within QC Copper, but also in the group at large. All of these companies are well financed and will be undergoing extensive drill programs in 2021. So frankly, I'm excited. The CHIBOUGAMAU district, I mentioned it briefly before, it is world-class. There's no other way to say it in terms of the amount of copper that's come out of it. There are other players in the camp. I'll mention our competitors, CHIBOUGAMAU Independent Mines, great assets, Dore Copper, more great assets, and then ours, of course, in the OPEMISKA, which I biased, but I believe is the best asset in the jurisdiction given its proximity to surface, its grade, which are phenomenal for a near surface deposit, and our access to infrastructure. I think we have scale, grade, and all sorts of optionality baked in, but nonetheless, it's great to have good neighbors. I think this district is primed for consolidation down the road. That's not our focus today, but down the road as M&A heats up in this industry, and it's bound to do it because that's how this industry survives. I think there are going to be districts that are favored and given premiums to shareholders who invest in them. Clearly, we believe that Canada is a place that deserves premium, and Canada is a big place, and Quebec is top of the list in terms of places to operate within Canada. And so I think when you can provide the security of jurisdiction combined with the pedigree of the geology, and then all bolstered by the infrastructure benefits that Quebec, CHIBOUGAMAU, and QC Copper offers, there's really no other place in the world I'd rather be operating. This is a zoom in of the OPEMISKA copper mine project. You can see here the primary focus of the OPEMISKA is always the Springer and the Perry mines. Those were by far the largest two producers of that 1.4 billion pounds and million ounces of gold. We started off with the acquisition of these properties here. That's where the substantial, call it reinterpretation and drilling, have been done to date. In fact, the drilling done to date has only been on the Springer. We haven't yet attacked Perry, but that's going to change very soon. In fact, in January. Earlier this year, in and around the PDAC, which was also peak COVID alarm time, was when we made the announcement to take this Springer and Perry land package, which is roughly 1,000 hectares, and we turned it into 13,000 hectares. And we acquired the third and the fourth mine in the OPEMISKA copper mine complex, which are called the Robitaille and the Cook, as well as approximately 12 kilometers of the Gwillim Fault, which is the regional structure that controls the mineralization. And it's a very mature, well-known fault. So we now have what we call a district scale play. The Robitaille and the Cook are almost certainly going to be incorporated into a resource at a certain point in time. However, the resource that I mentioned before that we're focused on is going to be on Springer and Perry. We do have, call it, exploration upside ideas that are going to occur on the Robitaille and the Cook, particularly on the Cook, which is a bit of an outlier in terms of the, call it, mineralized style of these four mines. The Springer, Perry, and the Robitaille are copper mines with a gold credit, very actually healthy gold credit. Meanwhile, the Cook is the inverse. It's a gold mine. It produced about 300,000 ounces at 5 grams per ton for Falconbridge, and it has a copper credit. So we believe that the further you get away from the Gwillim Fault, the inverse of the copper-gold relationship. And our Vice President of Exploration, Charles Baudry, who is listening on the call but not with me on the room, has come out with a webinar, and I encourage everybody to go onto our website, qccopperandgold.com, and go under videos and look for Charles's webinar, which came out about 3 weeks to 4 weeks ago, where he details a new interpretation particularly related to the Cook. So of the 20,000 meters that we're going to be undertaking in the new year, about 15 to 20% of those will go towards exploration. And what I mean by exploration is finding new ore bodies, whereas the Springer and the Perry is about delineating and expanding known resources and making it defined as an ore body under the 43-101 regime eventually. We are also looking for new things, new discovery, exploration. That's where you can really gain excitement and ultimately add to what we call a hub and spoke model. We believe that we will be putting a processing facility here on Springer. And if we can add resources in approximate fashion, I mean, keep in mind, these are just literally a stone's throw away. You can process it all at a centralized facility. I'll note there's another deposit here owned by obviously an arm's length company to us, but there is the prospect of further consolidation. Then of course, just beyond this map here, which is quite zoomed in, you have the CHIBOUGAMAU district, where there are a whole host of other mines that are very active in good groups who are all well financed moving it forward. So to me, if you want access or exposure, I should say, to copper, more particularly copper in Canada, you need to look to the CHIBOUGAMAU district and look towards QC Copper, because I think we are the anchor resource in this area, no question in my mind, at least. These are some of our historic resources. If you look, this picture here is sitting on my desk. That's a photograph of my desk, and it's pure metal. It's chalcopyrite, 17% copper with a nice gold credit in there. Those are the high-grade veins that Falconbridge was mining back when they were mining it up until 1991. Clearly, you can see that sort of mineralization. It's very easy to mine. However, what they ignored, either they didn't know about it or they didn't want it, is that the mineralization that exists outside of these veins actually happens to be mineralized. The story behind why we became interested in this project is because we identified that very trend that we believe went ignored or not cared about for various reasons in the data. And there's an extensive data room that we have recreated. And we saw that outside of these veins, there was disseminated mineralization. We see it here in some of these historical intersections when we resample it at 81 meters of percent. I mean, that got our attention, especially considering it is very shallow. It starts almost at your feet. However, you can still see over and above these intersection, you can see there's tremendously high grades. I mean, there's a meter at 30%, 2 meters at 21%. There's really high sweeteners. And now I should note that there is a crown pillar that largely remains intact in this mine. And what a crown pillar is, it's the ceiling of the mine. And typically these ceilings are anywhere from 50 to 70 meters. Which is we've confirmed with our drilling. And so why that's important is that a lot of this mineralization here, so most of this mineralization at depth will have been mined, obviously, by Falconbridge. They were good at what they did. They took it if they saw it, but what they didn't do is they didn't mine the crown pillar. So if we're going to define economics, particularly in an open pit, we're going to get anywhere from 50, maybe more meters of not only this disseminated material outside of these veins, but the sweetener of this, let's call it pure metal chalcopyrite here, going into the early years of this deposit, which certainly impacts any economic analysis. So that is something that should not go ignored, certainly not by us. This is how we interpret the veins here. So this is the Springer primarily. This is where we did our drill program earlier in 2019, and this is largely where we'll be drilling out systematically in 2020. The Perry is about 500 meters up to the northeast. To me, they're effectively one mine. It will be one resource. They were two mines in the sense that they had two mine shafts and they were mined at different points in time. But for all intents and purposes, the Springer and the Perry will be effectively one open pit resource. There is substantial drilling on site that we have access to. We've done a lot of work on resampling the core, reinterpreting, all went into our database. I won't detail these results here that include our results, but also historical results. But I will say they're nothing short of spectacular. To have 74 meters at 2.5% copper from 28 meters from surface, or 160 meters at 1% from 3 meters is eye-popping, and it's especially eye-popping if you consider that it's on the rail. And I have to emphasize how important infrastructure is, particularly when it comes to base metal deposits like copper. Gold you can get away with in the Arctic, but when it comes to base metal, infrastructure dominates the economics, and that's why we think this project is special. These are our sections. So you can see here, this is these yellow bits are sort of cross sections of the red, which we interpret, and these are the veins. And you can see that we drilled through the veins and we drilled outside of the veins here, where we depict in these ovoid sections here, which show the disseminated zones. Really quite interesting stuff. It carries throughout. Obviously, you get the sweeteners in the veins, but this is not smeared. you can clearly see that there's mineralization all throughout these intersections here. I won't get too much into it. These are our, this is our latest model of, particularly of the Springer. This is available in a 3D video format on our website. We spent 12 months. In fact, one of our geologists, Antoine, spent 12 months in a data room just rebuilding this model, taking all of the, I think there's 800,000 assays, plenty of work that went into this, all with the prospect of modeling a resource and ultimately a PEA, which we plan to deliver in 2021. This is our drill program. This is where we're going to both expand the tons, which is critical, and to optimize our strip, which is also important, and maintain, if not exceed, our grade. Our grade is good, our tons are good, our strip is excellent. So we just need to expand on all three things, and that's what this 20,000 meters is aimed at doing, and this is sort of what it looks like. I won't get too much into the exploration upside because I just won't do it justice. So I, again, encourage you to go to our webinar that Charles Beaudry, our Vice President of Exploration, created and posted on our website. I'll leave it at that, but it's about 13 minutes and it explains how he has a new idea on where we may look to find alternative ore bodies within a very mature system. So that's always interesting to us. And as we wrap up here, this is our, I guess, our chart of where we've been. I did a fair job of summarizing the last 2020, so I won't get into too much details. However, it's really all about what's lay ahead. We think the drilling is going to be a major catalyst, which will all be summed up by a resource estimate on Springer and Perry. And we certainly hope that the copper price cooperates. If it does, it could be a very exciting 2021. This is where we're going, and I think this clearly our market cap has changed since then. But this is where we think we can go. We put together a list of comparable assets there, ranging in market caps, substantially higher where we are, all the way up to $500 million. And these are 40 million ton resources. I assure you our goal exceeds 40 million ton resources, and I think we can get it substantially above 0.8. I'm not to say that we're a direct comparison to Sierra Metals or Bolivar. I'm not overly familiar with that asset, although I can assure you that if we can deliver comparable numbers in the heart of Quebec, I don't want to say the sky's the limit, but we certainly have a long way to climb in terms of value to be realized if we can achieve our goals, and I do believe that we can achieve our goals. This is our team. Hats off to all of them. Congratulations on being reappointed this year. Again, this is a 100% team effort, led by myself, but also to Charles Beaudry, who's the Vice President of Exploration, a very talented geologist, very well-respected guy. We rely on him, and he leads our technical aspect. Unfortunately, we're not accepting questions due to the nature of the presentation here today. However, these are my direct contacts. Call me, email me anytime, and we will get back to shareholders. So with that, we thank you for your attention, and we'll, as I said, thank you very much, and we'll look forward to hearing from you.